Commodities and stocks are both investment options, but they work differently and serve different financial goals. Choosing the right one depends on factors like risk, returns, and market behavior. A commodity is a physical asset like gold, silver, oil, wheat, or coffee. Commodities are tangible resources that people buy and sell in global markets. Their prices fluctuate based on supply and demand, economic conditions, and geopolitical events. Investors trade commodities through futures contracts, ETFs, or direct ownership. They are often used as a hedge against inflation because their value tends to rise when the cost of living increases. However, commodity prices can be highly volatile, especially for energy and agricultural products, making them a riskier short-term investment. A stock represents ownership in a company. When you buy a stock, you own a small part of that business, and its value depends on the company's performance, profits, and investor sentiment. Stocks offer long-term growth potential and may pay dividends. They can be bought and sold on stock exchanges, and prices fluctuate based on company earnings, market conditions, and economic factors. While stocks generally outperform other assets over the long run, they can be volatile, especially during market downturns. Now, let's compare them side by side. Risk and volatility. Commodities are highly volatile due to unpredictable factors like weather, political instability, and supply chain disruptions. Stocks are also volatile, but tend to stabilize over time. If you can handle short-term price swings, commodities might work for you. If you prefer steadier, long-term growth, stocks are the better option. Returns and growth. Stocks have historically provided higher long-term returns than commodities. Stocks benefit from business growth, dividends, and reinvestment, while commodity prices mainly depend on supply and demand cycles. If you're looking for consistent long-term gains, stocks win. Inflation hedge. Commodities like gold and oil tend to rise in value when inflation increases, making them a good hedge against rising prices. Stocks, however, can suffer during inflationary periods if company costs rise. If you're worried about inflation, commodities are a better hedge. Liquidity and ease of investment. Stocks are easier to buy and sell through stock markets. Commodities, especially physical assets like gold or oil, can be harder to trade and store. If you want easy access to your investment, stocks are the better choice. Diversification. Commodities provide a way to diversify your portfolio since they don't always move in the same direction as stocks. If you want to reduce risk, adding commodities can help balance a stock-heavy portfolio. So which is the better choice? If you're looking for long-term growth, steady returns, and easy trading, stocks are the best option. But if you want to hedge against inflation, diversify, or trade in physical resources, commodities may be the smarter choice. The best option depends on your investment goals and risk tolerance.